Hello, everyone. Today I have a call with someone who reached out who's actually another tax advisor who wants advice on how to advise his client, who is a Canadian group of Canadian companies who are expanding to the U.S. and they're expanding and they have a U.S. corporation. He wants to know how to run it, how to operate it, how to report it. He has a bunch of questions on that. So if you are a Canadian or you have Canadian clients and you want to expand to the U.S., this is the video for you.
Haven't done my taxes, I'm too turned up. Haven't done my taxes, I'm too turned
So
up.
Emran, thanks for scheduling the call today. You're a little bit different than my normal caller, which are usually non-residents or some residents. You're actually a fellow tax professional who wants to kind of discuss some planning and some theory. So no, I'm happy
Yes,
to have
yes.
you today. Thank you.
Well, thank you for taking the time to take the call. I appreciate it.
So I guess let's get started. You tell me a little bit about your client. What we're dealing with here.
So yeah, I have a client in that's out of Canada, and it's about 3 shareholders that started a company, and they're in the, let's just say, the agricultural business.
Got it.
And they have a Canadian company. That Canadian company owns 100% of a Canadian holding company. In turn, that holding company owns 100% of a U.S. corporate CCorp. So they do business with their Canadian company. They also have the business that they do in America is from the U.S. company. So sometimes they transfer funds, cash from here to the Canadian company, vice versa. The only thing they incorporate in Delaware, they have no permanent establishment or effectively connected income, as from my research.
Well, they have a U.S. corporation though.
They have a U.S. corporation.
Okay.
They have an address in Delaware where there's a registered agent and mail is being forwarded. That's all the transactions that they have in regards to no offices here.
So
no
what's the purpose of the U.S. company?
It's easier. The purpose was in regards to having an established company here to do business with the suppliers in the U.S.
So they're selling or buying. They're buying from the U.S. or selling to the U.S.
So it's a drop shipping company, a drop shipping model where they have suppliers that are in the U.S. and when the client places the order, the supplier gets notified, sends the product to the client in the U.S. The difference between the price the company is selling at and the supplier is their profit.
Okay.
That's the business model right here.
And it's agricultural business?
No, it's in the weed industry.
Oh, cannabis. Okay, so they're running a cannabis delivery service.
They're basically supplying to growers supplies like lighting equipment, anything needed to grow.
But they're drop shipping the supplies. They're not actually manufacturing the supplies.
They're not.
Interesting.
They're drop shipping, so they have connections with the suppliers in the U.S.
So it's
just basically at the end of the day, it's a marketing.
It's like affiliate marketing. It's affiliate marketing is what they're doing.
Essentially that. They're marketing the suppliers' products, but they have their own website and they have their own prices there for products. So they don't see the supplier's price. They just see the client's price.
Yeah, so it's definitely affiliate marketing. It's like, so a lot of people, it's kind of like drop shipping, but drop shipping is really when you're selling other people's stuff from China is really the drop shipping. Affiliate is more of marketing other people's stuff. So they're just basically a marketing services company more than anything.
At the end of the day, but they're trying to expand and create their own products eventually. But this is just starting the industry that they're doing right now. Yeah.
Okay, got it.
Drop shipping model.
Yeah, that makes sense. I get it.
Yeah.
And so what are their concerns? What's the goals? What are they trying to do?
I mean, they don't have concerns. I have concerns because since I'm their accountant. So they don't know what to do. They created this whole thing. They expanded really quickly. They don't even know these issues that, what's my tax requirements here in the U.S.
So they should be paying taxes in Canada, right?
They will, yes. So, for example, they have different payment methods within Shopify, right? And some of those payments go directly to the Canadian company, right? They have a specifically Canadian bank account just for U.S. sales. So they transfer that money there, then they transfer it back to the US. So it's a whole transferring situation. At the end of the day, I want to know what's their liability here in the US. Do they right now, the income in 2019, would that be subject to the US taxes of 21%? Or because of the treaty between the US and Canada, is there a treaty-based return where there is no tax, is just an informational return stating that,
Well, there's
X
no,
payment.
so because you're dealing with corporations, it's not, the treaty doesn't really apply. I mean, the corporations pay tax where it is. So it's all depending on how you run the accounting and how you run the profits. So if and you kind of have the flexibility, since it's kind of this thing going on, that you can recognize a really small profit in the U.S., but it depends on what province they live in Canada. Because if they live in like an obscure province in Canada, their all-in tax rate could be like 14%. But if they live in like Montreal, they could be paying like 30%.
They live in Montreal.
So Montreal is a higher tax province in Canada, from what I understand. So it might make more sense for them to kind of operate almost a lot more of their business within the U.S. and pay taxes in the U.S. instead of in Canada.
Mm-hmm.
That's something that and what I find with most of my Canadian clients, I work really closely with the advisors because our countries are so close. It's good. We need to be on the same page. Having a proper accounting is pretty important, and having accounting is important, but a lot of the way you do the accounting is influenced by the tax strategy. And I find also that the main objective of a lot of people doing in this space isn't to take money out of the company. It's to reinvest all the money into their company, reinvest the profits, and grow the company. And that's what I find with almost every single person doing online business like this. So if that's the goal, if the goal is to really reinvest their profits into the business, they really want to find the lowest tax jurisdiction they can. And I believe Montreal is a pretty high tax place. So what they should consider doing is using a U.S. company, a U.S. bank account, and send all of their sales to the U.S. company, and then pay basic expenses in Canada with their Canadian company. And like when they need to get paid money to live, they pay management fees to the Canadian company, and then pay themselves salaries or pay themselves dividends or salaries from their Canadian company. But that you'd have to work through with a Canadian advisor.
Right. Okay. Now, question in regards to when I asked you about having permanent establishment or effectively connected income, having a CCorp in the U.S. without no employees, without no offices, does that trigger permanent establishment?
So permanent establishment is really for, like, permanent establishment doesn't matter when you have a U.S. corp. They have tax presence here because they have a U.S. corporation. Permanent establishment is more of an issue for a Canadian company that doesn't have a U.S. subsidiary, or that has an LLC as a subsidiary, because that's when a foreign company would have to pay tax in the U.S. is when it has permanent establishment. But right now it won't have permanent establishment because you have a whole separate U.S. entity that's doing business in the U.S. That's part of the ownership structure. So permanent establishment isn't really an issue as long as you do stuff in the U.S. in the name of the U.S. company. Then it will never be an issue because you're already paying taxes in the U.S.
Right.
And the idea is permanent establishment is really for companies that don't have subsidiaries in the country. That's when you have risk and exposure. But when you have entities in each country, you just need to make sure that you do that country's work with that entity so that you keep it separate and there won't be any issues.
Right. So let's say hypothetically this client is not in Montreal. It's in a lower jurisdiction bracket for Canadian taxes. How would that work? What would the structure be then for optimal tax savings?
Then it's easier for them. You want to just have you're using the U.S. company really to minimize the exposure of the Canadian company. So using the U.S. company for sales taxes in the U.S., using it for payment processors, using it for banking. And since all the buyers and sellers are all in the U.S., right, it's going to be easier, and there's going to be less foreign exchange rate stuff. It's going to be easier to operate. And at their scale, you said they're doing almost $1 million. At their scale, the costs of having the U.S. entity open in terms of like accounting and tax fees and stuff are like don't really matter. The benefits they get of having a U.S. entity and operating in a more streamlined, easier manner would make up for the costs of keeping the entity open, right?
Right. Makes sense. Now, will I file
And then let me double. And then the last thing is that if they can, then they pick up all their profits in Canada, and the U.S. would run on smaller margins because again, they're not doing any services from the U.S. The whole purpose of the U.S. entity is facilitating payment processors, so they can say the value of that service is whatever and pick up a small income here and pay a small tax here.
Yeah, but majority of the U.S. transactions from a U.S. Bank of America.
Yeah,
So
but the I mean they can send all the money back to Canada, and really all the work's being done in Canada by the Canadian company because they have no people here. There's no employees in the office. It's just transactionally all the business happens here, but all the work is done in the other country. So that's how they can justify sending all the money back as an expense.
and when you do the return here, it will be management fees just to control the.
Yeah, it's business, it's just consulting fees, management fees. It's not even, it's just like business, like marketing fees, whatever you want, because
Right.
literally all they're doing all the work with all the people, all the marketing services in Canada. So paying the
Right.
money to Canada for those fees, it makes sense. I think it would hold up.
Got it. So that would be advantageous if the foreign jurisdiction has less in taxes than the U.S. jurisdiction. If
Yeah,
it's the other way, you should keep the money here, do all the transactions here, pay the tax here. And hypothetically, let's say that's the situation. When you transfer money from the U.S. bank account to the Canadian, what's the Canadian company's obligations at that point?
I mean it's the same. It's the same thing. Both they're corporations and both entities. They both pay a tax on their profits, and then both have dividends. You both pay tax and dividends to the owners or salaries to the owners. They operate on their own. They operate the same way because they're both corporations. And it's pretty similar at Canada and the US in terms of like the general operations. So everything would be the same except the management fees to the Canadian company would be smaller. I think that would be the only difference. The management, the money sent back to Canada to cover their expenses, their living expenses, and
It's
everything would just be
the
smaller.
reverse. Yeah.
Yeah.
Let's say, okay, so let's assume that the jurisdiction is lower in the US. Is it beneficial to have a C-Corp or a partnership? Because it's a double taxation of dividend.
Well, they're both. It's definitely better for a C corp. A partnership with foreign partners has mandatory withholding requirements of, and it gets a lot messier with the partnership, and also the you have to see how it's taxed in Canada. I know LLCs are taxed as corporations in Canada, so there's double tax issues with LLCs in Canada. So I almost, Canadians, especially with operating businesses, using an LLC is usually a bad idea because, like I said, it's passed through here, and it's a. Do you know about that? You want me to go into about that a little more?
In regards to what?
The LLCs, how they work in Canada.
I know how they work here, but not in Canada.
Okay, so in the U.S., so if I own an LLC, so if this business was an LLC, in the U.S., here it would pass through to the owners. So the Canadian company or the owners directly would file tax and pay taxes. In Canada, the LLC is a corporation. It's taxed as a corporation. So they would pay tax in Canada on the as a corporation, and they wouldn't be able to claim any foreign tax credits because they paid them personally. So the foreign tax credits wouldn't match up. That's the difference because in the U.S. you're paying personally, and in Canada you're paying on entity level, and you can't pollinate the foreign tax credits. That's probably not a perfect explanation, but that's the reason they don't do it.
So we know that if the company's tax jurisdiction is lower in the U.S., C corp is advantageous with foreign shareholders. Is there any filing requirement? I know it's 5472, I believe.
Yeah.
One of the forms is required to fill in information about the foreign shareholders. Is there anything that needs to be done besides that, having a foreign shareholders in a U.S. company, any reporting requirements or anything that there shouldn't be any exposure to them in regards to penalties and stuff like that?
No, you just need to read the 5472 really well because you're actually doing business with each other. There might be a need to have a basic cost sharing arrangement or something. But for most of my companies, we keep it pretty simple. It's just the 5472 and then good accounting, good record keeping.
Yeah. And would that return will be an 1120 or an 1120F?
An 1120. An 1120S can't have
F.
It
F.
has to be owned by U.S. people. Can't have foreign owners.
No,
And it
no,
has
the
to,
1120F.
oh,
I
F.
want-
So the
Yeah.
1120F is for if the Canadian company was just doing business in the U.S. and they had no subsidiary, but they have a U.S. corporation subsidiary that they're operating with.
Got it. So that 1120F will trigger if there is no CCorp in the U.S. subsidiary.
So if you have, if a foreign corp has permanent establishment in the U.S., they would file an 1120F.
I got it. And there will be, would that be a withholding requirement, or there will be tax at 21%?
I don't know. It's a mess. 1120F, the big issue is there's tax at 21%, I believe, but they also have the branch profits tax, which is like a
Right.
35% tax on, but it's basically on dividends. It's on profits sent out of the U.S.
Yeah. Okay.
It's really cumbersome and usually much more costly to maintain and operate that way. So we don't ever really do it because everyone opens corporations instead.
Got it. Got it. I guess in conclusion, if it's the U.S. tax jurisdiction is beneficial, we'll do an 1120F.
No.
I'm sorry, 1120. And the majority of the profits will be taxed in the U.S. corp.
Yeah, you really need to, I guess the first step would be have a call with the Canadian tax advisor and discuss rates and discuss plans with your clients if they want to take money out or reinvest it.
Okay.
So knowing the rates and knowing the client goals are like super important. And then from there you can advise on help them tweak their accounting so that, classify transactions the right way and operate the right way so that they achieve their goals and pay the lowest tax possible. Right.
All right. I mean, that I appreciate it. That kind of gives me a good summary of what action steps to take in regards to this client.
Yeah, sure. Good luck. I mean, I get a lot of Canadian clients. It's obviously we share a border with them and they're very advanced and, it's good stuff. So, yeah, I hope this was helpful. Thanks for letting me post it on the channel. And I hope it helps other people in the similar situations.
Thank you. Hope to talk to you soon.
Cameron, best of luck, man. Be in touch.
Take care.
Okay, bye. So that was a great call. I think we got over a lot of details and nuances between doing business between Canada and the US, what kind of entities you use, and how taxation and reporting is done. So I hope you really found that helpful. And if you're from Canada and you want further clarification, send us an email. I'm happy to do more calls like this because I think it's very interesting, very practical, and really helpful. So if you have had any of these issues, or if you're from Canada, comment below and let me know what you think. If I was wrong, if I'm right. I'm just doing this I'm not doing any research before these calls. I'm just taking them and just going off the cuff with this. So if I'm wrong, please correct me below and I'm happy to discuss. And again, if you thought the video was helpful and you liked it, you enjoyed it, please subscribe, give me a thumbs up. And if you want to call, again, the details are in the description. So thank you so much for watching and have a great day, everyone.